of Express E-Adda, a series of informal interactions with news and opinion makers organized by the Indian Express Group. This evening at Express E-Adda, our guest is author and global investor Ruchir Sharma. His new book, The 10 Rules of Successful Nations, is born of data analysis, on-the-ground research, and his deep interest in contemporary politics and current affairs. Ruchir was with us at Adda last year too, when he joined us for a very insightful session just after completing an election road trip around the country. He's joining us today for another discussion, which we are sure will be just as insightful as the last one, this time about the economic repercussions of COVID-19 as it restructures the world in every possible way. Ruchir will be in conversation today with Anand Goenka, Executive Director, The Indian Express, and P. Vaidyanathan Iyer, Executive Editor for National Affairs, The Indian Express. Before beginning the session, I would like to thank our corporate partner, IIFL Wealth and Asset Management, and associate partner, Barclays.
India was not as mentioned as one of the breakout nations. In fact, I had said, at best, we have a 50-50% chance of being able to get into the club of breakout nations this decade. So the main thesis of that book was that the BRICS are overhyped, and the true emerging nation in the world is the United States, because it ended the book ended on the note that technology is the key to long-term progress. And the United States was just coming out of the global financial crisis, and its tech prowess was further reinforced after the global financial crisis. And people were not really focusing on it because they were so caught up in the commodity boom and the BRICS boom. So I would say this, that one of my biggest regrets in life is that I wish I had organized my investing career accordingly, which is that emerging markets have not been the place to be over the last decade. China arguably has still done okay, but other emerging markets in general have disappointed as far as their economic growth is concerned. My biggest and the last decade has very that I wish I had the decade of the United States. The United States has been the comeback nation in terms of both its economic performance and even more so its financial market performance. So breakout nations ended on this note of optimism about the US and pessimism about a lot of the BRIC economies. Now, of course, there are some economies which did even worse than I expected, such as Turkey and some of the African countries, which is that's the game of forecasting, that you get some right, you get some wrong. But broadly, I wish I had organized my investing career more according to that. And India, the last decade, in every which way, has underachieved in terms of both its economic growth and even in terms of its stock market performance. In dollar terms, the Indian stock market over the last decade has not given you any returns, or even in inflation-adjusted terms. So I wish that people would, like you, would remember breakout nations more, because often when you get a forecast wrong, people sort of really club you on the head for that. But when you get something right, it's good if someone remembers it.
No, but absolutely. Before I move to the next question, I do remember the rider that you put, because I was the one sitting in Bombay who edited that copy when one of my colleagues had written about that Adda at that point of time. And you did say a rider, you put in a rider saying that, warning, in fact, I think that
last year too, when he joined us for a very insightful session just after completing an election road trip around the country.
Much earlier than what
he's joining us today for another discussion, which we are sure will be just as insightful as the last
this
one.
8 years span,
this
this
time
welfare
about
economic,
the economic repercussions of COVID-19
basket has really grown. Do you get that? Would you see that as a reason?
Ruchir will be in conversation today.
Yeah,
with
so the
Anand
point I made
Goenka,
in that book is that if you look at the and something which I've also said subsequently, even in my latest book, I've pointed that out, that if you look at the success of East Asia,
beginning the session, I would like to
that how did the East Asian economies succeed, and why have economies in Latin America and Africa failed, or it is underachieved. And you can see what the
super. Thank you, Pooja. Hello, very warm welcome to the Express Adda. Very exciting one and a very newsy one again.
What we say even about Korea
with Ruchir Sharma. Ruchir, good to have you with us. Thank you for being here.
Spent very little on welfare.
Glad to be back.
It was a lot of ruthless
Ruchir,
capitalism.
is your fourth book.
They wanted to become manufacturing
and
powers.
I really enjoyed this one.
Move their peoples
I want to tell you that the name is very, I feel very social media.
Exactly, like to the ocean front, to the key ports, and export their way to prosperity. So they were very, very clear about it, that they did not want to spend much on welfare at the early stages of development. On the other hand, economies in Latin America, such as Brazil, spent a lot on welfare. And look at where they got. For the last 100 years, Brazil has been stuck in terms of its per capita income compared to the United States. It's at the same level as it was 100 years ago. So that's the trap. Now, in India's case, we say, oh, this is being very ruthless. We have to spend a lot more. We have so many poor people. And my point is, we have tried this for 70 years. We keep coming up with one scheme after one scheme after one scheme in the name of helping the poor. And the progress we made in terms of our per capita income growth is still limited. Yes, we have made a lot of progress since the 1990s. Let's not take that away from India, that the per capita income growth has been quite impressive. But we have still sort of fallen short of where we wanted to be, where we aspired to be consistently. And I'd say that our resources are limited. There's only that much we can spend on. And at the early stages of development, all the successful economies spent a lot on infrastructure. And that's what I try and mention in my book as well. Here, that is a key rule for being a successful nation.
Yeah. Ruchir, one thing which we have seen in India, the economy has kind of slowed down even before the second term of this government, and last 2 years it has been slowing down, and now there has been this, of course, COVID induced economic distress, but despite despite this large scale misery, which I believe has resulted induced by say lockdowns as well as the COVID, we haven't really seen the popularity of the Prime Minister receding in any manner. the Prime Minister is still as popular as he was, and which leads me to the question whether is politics economic proof? Do we get a sense that economy doesn't really matter so much when it comes to politics and votes?
Absolutely. This is the point I made last book, Democracy on the Road. Carried an interesting exercise when I was doing that, which is that there have been about 30 instances when a state's economy has grown at a pace of more than 8% over a chief minister's 5-year term. The probability that the chief minister gets re-elected after delivering a growth rate as high as that, 8% economic growth rate, is still only 50%. That is a very telling statistic, that you can deliver 8% plus economic growth and you may still not get elected. So I think that in this country, the link between politics and economics, as you point out, is very loose. And I think that the Prime Minister probably has figured this out. My other disappointment as far as India is concerned is that if you look at other countries, especially in the West, when we look at the right-wing parties out there, those right-wing parties tend to be quite business-friendly or market-friendly. They have a much more free market agenda. In India's case, unfortunately, we don't have such a party, because I think that everyone believes in socialism and statism. Everyone believes in control. Yeah, there are some chief ministers who have been pro-development, but even then it's been very tight-fisted in terms of how they run the states. So there have been very few true free marketers in this country. And the DNA, as I say, in this country is one of very much of statism and socialism. And even the right-wing parties here, such as the BJP, the so-called right-wing parties, when it comes to economics, the economics is pretty left of center.
And Ruchir, you don't think that that's changing now with COVID? You don't think the kind of leverage that the big money bag, the big corporate conglomerates, whether it's a Tata, whether it's a Ambani, whether it's an Adani, whether it's a Jindal, whether it's even the big tech unicorns, the kind of leverage that they have with government now has suddenly changed literally overnight, because the government is the kind of fiscal stress the government is in. Has that changed? Do you think in India and even in other parts of the world? After the crisis.
No, in fact, if anything that this pandemic has taught us is that the role of the state has increased further. Because in India, also look at the way the state had to turn more intrusive in the way that it has dealt with the pandemic. We are still dealing with a maze of bureaucratic laws in terms of when you can open a factory, when you can't open. So I think that that's just not true. Yes, I think what is right is that India typically reforms when it has its back to the wall. And in that regard, the central government is realizing that they need to carry out some reforms because they are cash-strapped. And even on the lockdown, they had to abandon that strategy, I think a lot driven by economics, rather than by what the epidemiologists were saying, that because we were just out of cash, our finances were literally broke. So we had to back down on that policy. But I don't think that the corporate sector in India has any more leverage over the government than it did in the past. Yeah, I think that there are a couple of corporates in India that are very powerful. But in fact, in one of the things I pointed out in this book is that if you look at the list of billionaires in India, what we find is quite, in fact, I'd say the margin a bit disturbing, because we're not seeing the rise of too much new wealth in India in terms of new billionaires. The wealth is getting concentrated in a few hands if you look at the billionaire list. But more than that, the new economy which has come up, the new business people, like you mentioned, the unicorns, the 30-odd unicorns that we have in the country, just for everyone's benefit, those are defined as companies with a market cap of more than $1 billion, not market cap, a valuation of more than $1 billion and not listed. So the 30-odd unicorns that have come up in this country, hardly any billionaires have come out of that universe. Why? Because the billionaires here, or the wealth creation is mainly happening outside. That you have the venture capital, private equity funds or other large funds from the US and China that are taking increasing stakes in these companies, but the new billionaires coming out of that list is very small, and the size is also very small. So I think that the corporate sector, in fact, as you know, and when you speak to the corporate sector in private, they will all tell you that there's a lot of fear about the regulatory backlash, about what the tax authorities can do, about what the courts can do, how the decisions can be questioned. So I'd say there's a fair amount of fear. The only positive is the fact that the government realizes that it has its back to the wall. The finances are strapped. So therefore, we're seeing some sort of reforms take place. Of course, I wish that it was much bolder. I mean, this is a great time to sort of think about privatization. Just look at the role of the state and how bad the public sector has performed in every sector. I wish that we were seeing much more of a push-off in this environment.
You spoke about the Indian billionaires, and your book has a very interesting chapter saying one of the successful rule is to have good billionaires. Just elaborate. I thought it was very fascinating. How do you define a good billionaire?
So this is, for me, a quick measure of what is likely to be a country's attitude towards wealth. And what I find in this country is that, or in any country, is that if you look at the wealth being created, you can sort of know as to what kind of wealth do people respect and what kind of wealth is likely to be much more exemplary than wealth which is being created through sort of means which could be seen as unfair. So I define good and bad billionaires as good billionaires as those billionaires who are producing their wealth because of their own innovation or manufacturing and in industries which do not require much government or regulatory help. On the other hand, I broadly define bad billionaires as coming from those industries which rely a lot on wealth creation coming from sectors where you need a lot of the wealth creation from those poor sectors. So I think that is a very key point out here, that how exactly do you do wealth creation in an economy? So it's not that everyone who comes from the commodity producing or rent seeking industries is a bad billionaire, but if you get the gist, that is roughly what it is, that if you have too much wealth from those sectors, it's a negative thing. And if you have too much wealth if you have a lot of wealth from the good billionaires, that's a much more positive aspect. And one of India's fault lines, which I pointed out first in Breakout Nations, was that towards the end of the boom in the 2000s, a lot of wealth in India was being created amongst the so-called bad billionaires.
And you don't see that changing now with digital being such a major push happening, in India, and just everybody is. I mean, even the most disconnected companies are getting so connected now. So you don't see innovation now because even corporates are against the wall, not just governments.
So true. So I think that is a positive aspect, that India's billionaire mix compared to where it was a decade ago has changed. But the one point I do find disappointing is that of these new wealth being created in the sectors you mentioned, a lot of it is happening overseas, or it's happening because you have what I define as this new era of tech colonialism, which is that you have US and Chinese investors that are making a lot of money as far as they're concerned. But look at the stakes of some of these promoters in the unicorn universe even. Their stakes have been diluted to 10, 15%. So full credit to them for what they're creating, but a lot of the wealth creation is happening overseas rather than happening in India.
And Ruchir, how much do you think about the concentration of power in this tech world? I mean, that it's all in Silicon Valley. Yesterday or 2 days ago, we saw Paytm was just knocked out of Google Play Store for about 5 to 6 hours. One of the largest apps in the country. I'm just trying to again ask about the tech colonialism that you mentioned. Is that something that will ever shift, you think?
No, I think that this is a global trend, and it's even more pronounced as far as India is concerned, that the US and China over the last decade have so dominated the tech space, and they're and they've created such behemoths on the back of that if you look at the 10 largest companies in the world today by market value, 7 are American and 3 are Chinese. So it's just all concentration of wealth between 2 countries, and and they have the muscle power to make a lot of acquisitions, to invest a lot more. And across the emerging world, this is a phenomenon that I'm seeing, and it's particularly relevant in India.
Yeah. You advise multi-million dollars moving seamlessly across all geographies. Is this something that would concern you? When would you say that now's the time to open purse strings and make bets on India?
No, I think that in India, one of the things that I'm finding a bit underwhelming is that the choices are getting more and more limited. Unique strength of India for many years that I would speak about is that the number of good quality companies that you could invest in India was always very large, especially compared to other developing economies. Unfortunately, in the last 3 to 4 years, that number has shrunk a lot, either because some of the corporates have been too leveraged and they're being forced to do what they can to get out of that leverage, or as I said, that a lot of the wealth which is being created in the so-called new economy is really happening at two ends. At one end, you of course have the emergence of Reliance, which is like incredible in terms of how big Reliance has emerged as a colossus as far as this country is concerned. And then outside of Reliance, if you look at it, a lot of the wealth creation is happening amongst these unicorns. But investing in these unicorns is quite difficult for the average investor. It's only if you're a very large private equity fund or soft fund could you take a big stake in those. But for the average investor to invest in these is very difficult. Say that the area and the size of the pie for an average investor to invest in India has been shrinking in the last few years because of this barbell, where you have concentration at one end. So you have one or two companies really very big. And at the other end, the new economy growth taking place amongst these unicorns, which is very hard for the average investor to access.
Ruchir, one of the things which kind of always fascinated me was about, growth prospects and, how growth has kind of been in democracies and in, say, autocracies or, dictatorships and various regime types. And, in whatever little democracy literature I have studied, I have read, there has been very little correlation between, say, growth and regime types. But you seem to kind of place your bets, or you seem to think and suggest that, democracies, you would still give them a more weightage when it comes to growth vis-a-vis autocrats. How do you arrive at this fine, subtle point?
Right. So we did a lot of research on this to figure out whether democracy or authoritarian regimes are better for growth. So what we found was that under authoritarian regimes, you tend to get much more extreme outcomes. So if you look at the very fast-growing economies in the world over the in post-World War II history, economies which achieved a growth rate of more than 6 to 7%, let's say for a decade, they were largely authoritarian regimes. Whether it was China or before that, when Korea and Taiwan were growing very fast, they were largely authoritarian regimes. But the downside is this: if you look at the biggest basket cases in the world, they were also authoritarian regimes and dictatorships, almost exclusively. Whether it was in Africa or Latin America, it happened. So under authoritarian regimes, what you get are very extreme outcomes. That if you get the leadership at the top gets the formula correct and is prioritizing economics, they can end up creating very high economic growth because they can get a lot done. On the other hand, because the leadership at the top often lives in an echo chamber and in a bubble, if they get something wrong, there's no one to criticize them, and they have the power that they can really take the country down the tube. So you get a very large spread. Under democracy, what we find, you get much more smooth outcomes, which is that you may not get explosive growth because you don't have the political capital to push through that very hard growth. On the other hand, you also don't get complete basket cases because democracy provides some checks and balances in a system. So that is what is one of my key findings in the political chapter of this book, that it's very popular for us to believe that, China could do A, B, and C because it was a dictatorship. Well, I think we underappreciate what was the quality of the leadership at the top. Whether it was Deng Xiaoping or Zhu Rongji, like in terms of what they did to push economic reforms, because for every China, there are 5 countries in Africa which have been complete disasters under authoritarian regimes and dictatorships.
And if you just elaborate that point with even with good leadership, right? I mean, you mentioned in the book Turkey, for instance, is an example where, in a sense, good experienced leadership is kind of becoming slow, not working for economic growth.
Yeah, so that's what is another key finding in my book, and it's particularly relevant today because what I sort of show in the book is this, which is that typically a longer the leader stays in office, the more negative is the stock market and economic performance. So look at emerging markets. We found that since data is available in the last 30 to 40 years, there have been roughly about 18 leaders that have completed more than 5 years in office and gone into a second term. Of these 18 leaders, 13 of these leaders produced subpar returns in the second term after having produced very good returns in the first term. They outperformed other emerging markets in the first term and they underperformed in the second term. So I think that this is the classic case as far as Erdogan's concerned, that when he came to power, he wanted to focus on the economic agenda. That's what he did. He was very focused on the economic agenda in the first few years. But as he stayed on to power and success went to his head or his priorities changed, he has gone from being this economic reformer to now being this person like who is following these very unorthodox policies that have been really damaging for their economy economically, and yet he still has enough political clout to stay in office. So I think that is the risk. With so many leaders we've seen, there's always an exception like a Lee Kuan Yew or someone, but broadly the finding is that the longer a leader stays in office, the more are the diminishing returns to power, so to speak. And from an economic perspective, the outcomes become more negative. And this is true even in the US. I've just written, in fact, today an op-ed for the New York Times in my latest piece there, where I've shown that even as far as the US is concerned, in the first term, any leader produced about 3 to 4 times higher stock market returns than in the second term. Now there are other factors also at play, but it's possibly more than just coincidence that you have such a significant variation in the stock market and economic performance between the first and the second term.
Yeah, one thing, Ruchir, when I'm reporting on the ground and talking to, say, several people who are advising the government or on policy aspects, something which I've picked up over the last couple of weeks is this, that there has been no dearth of advice to the Prime Minister in several closed-door meetings about the need for 2 specific things. One, of course, is that at a time like now, when corporates, there's complete risk aversion within the corporate sector, nobody is ready to invest. The thing which the government can do is to kickstart growth by increasing expenditure and increasing expenditure quite dramatically. So fiscal expansion, of course, was one thing which many policy advisors seem to have told the Prime Minister. The other thing which they said is about the financial sector. We haven't really seen any great competition in the financial sector since few banks came in, new private sector banks. So say, why doesn't kind of state reduce its stake? Let some banks be taken over by private players or whatever. So these 2 aspects have been told to the Prime Minister for a month or so back. But but what we have seen is, of course, the kind of fiscal stance the government has taken. It has spent less than just about a percentage of GDP in actual money terms. So were you sitting on this side advising the Prime Minister, 3 bullet points, what would you tell him?
Yeah, I don't know. That's a business I've long given up because I know that nobody listens. So there's no point in me sort of giving any advice because where that's going to go. But just in terms of whatever it's worth, what my thoughts are, at least on what these 2 suggestions are. On the second one, I've long been saying that we need much greater private sector participation in the banking sector, and we need much more banking sector reforms. And like India's public sector share in the banking sector is one of the highest in the world, save for maybe North Korea or something. So it is very high in terms of the share of the assets, and it's coming down on its own because the private sector, whatever growth happens in credit happens on the private sector side. So we are seeing privatization by benign neglect. Just wish the government would go ahead of the curve and do what they can. On the first point, I have to say that I am and I've been saying this publicly, that here I'm much more sympathetic to the government's stance, which is on the fiscal front, than to what the experts are saying. Because I find that in India's case, this is a line that I've borrowed from one of my favorite movies, Top Gun, that our ego keeps writing checks which our body can't cash, which is that we keep wanting to, we keep thinking that we have lots of money and, US is doing stimulus of X% and UK is doing stimulus of Y. Why can't we do similar stimulus? And my point is this, that we are still a developing country. Firstly, when you compare our extent of stimulus, compare it to other developing countries. And more than that, we entered this crisis with one of the highest public debts and fiscal deficits in the world, especially in the emerging world. So if you enter, and that's your starting point, then how can you afford to spend much more? Now, the government has done what it can outside of that. Because if you look at the amount of loan guarantees that this government has extended, that's pretty large compared to even other emerging markets. And on monetary policy, this government has done what the other governments have done. But even as far as monetary policy is concerned, we've got to keep in mind that India's inflation rate is still more sticky compared to other countries in the world, even other developing countries in the world. So if that is your situation, for you to sort of just throw caution to the wind and say, oh, I'm just going to go and print our way out of this mess. Well, look at the examples of other emerging countries. Turkey is trying that. Erdogan is trying that. But look at the results that he's getting. The economy is a complete mess in Turkey. It makes our economic management look stellar when you look at what, how badly Turkey is managing its economic affairs. You have countries in Latin America before this, even before the pandemic, the Argentinas and the Venezuelas, which have tried this model, and it just doesn't work. And this is where I think that at least the political establishment and the Prime Minister in particular gets this, that we don't know whether high economic growth wins you elections or not. In fact, as I said, the evidence is very mixed. But one thing we do know, high inflation for sure kills economic prospects. I mean, you've seen this year after year. I think that the business community and even the general media underestimates that, I think. And we've seen that in our travels, that just how much inflation can be a killer. I think that Narasimha Rao paid a price for it, despite all the economic reforms he carried out in the 1990s and got high economic growth. There were many reasons why he lost, but one of the underappreciated reasons is high inflation that came in his term, towards the end of the term. I think it was similar with Rajiv Gandhi in the late 80s. I think it was similar that one of the biggest fault lines of the Manmohan Singh government was to take such a blasé approach towards double-digit inflation at the end of his term. I think that, so high inflation is a killer for sure. And I think that the government is wise to junk such advice, that you just print your way out of trouble and we need much more stimulus. We don't have the resources to do it. We don't have the money to do it. So therefore, the focus needs to be on how do you get the animal spirits up? How do you sort of carry out an economic reform program rather than do this? And this point that we keep launching, even this government, we keep launching one scheme after another. I remember having a chat with a very senior government official about this. And he told me something very startling. He said that in this country, we don't even know the number of schemes that are currently running. He tried to get an audit done of that. And at last count, there were more than 1,000 schemes in India that were running. And, because one gets repackaged or something new comes up because the other one doesn't work. So we can keep launching scheme after scheme after scheme. For 70 years, we have done this. And this is what we have to show as far as the per capita income is concerned.
Richard, this thought of printing your way out of the problem, has it ever worked for anyone aside from, from the US?
No. I think that as far as the US is concerned, because it's got a reserve
global currency, yes.
Yeah. like it has much more liberty to do that. But remember that even as far as the US is concerned, there is a fair amount of trepidation at what they're doing. Gold prices are going up. The millennials are buying bitcoins. So there is some concern about what's it's happening in the US. And the US also have shown that yes, if you have your reserve currency, you can print your way a lot, but there are still adverse consequences. One of the big paradoxes as far as the US is concerned is that you have this incredible tech boom, and yet what you have in the US is declining productivity over time. And I've shown that the reason why productivity is declining in the US is because of the rise of zombie companies, that you have these companies which are staying afloat, which have no business to. 20% of all US companies today can be classified as zombie companies, companies that don't even earn enough profit to make payments on their interest. And so they have to keep going to the bank. Now, there's a consequence of that you have easy money, you let these zombie companies rise, but you stop startups from rising even faster. So ironically, in the US, the startups are in fact declining over time. And so the rise of the tech oligopolies and you have the rise of the zombie companies, and the middle, a lot of these other startups are getting crushed. They're getting crowded out. And this is a consequence which I think is underappreciated and something that I've written extensively about. So there are negative consequences to just printing. Now, no one said that you should artificially maintain high interest rates or artificially, do that. No, you should cut interest rates to the extent you can. But in India's case, given where inflation is, I think that real interest rates are quite low. And this advice of printing our way out of trouble sounds very easy theoretically, but as you yourself sort of point out in your question itself, that it is a strategy which has not really paid dividends elsewhere. And it's so interesting that China today is being much more cautious in terms of the amount of stimulus that it is extending, because it tried to do this in 2008 after the global financial crisis, built up a massive debt bubble after that, and it took many, many years to try and even shove that to the side. And it took a tech boom for the Chinese economy to finally emerge after many years of slowing growth.
If I can just come to the market specifically, you start your book by saying that economists have never forecast a recession accurately. The markets have a better history of getting these kind of forecasting right. How do you view markets today globally? I mean, most markets you see are doing so well, but all powered by just a few companies. Is it able to forecast any better now, or is the forecasting abilities of the market reduced significantly because it's so disproportionately weighted towards a few companies?
Yeah, so I think that it's a bit of both, because if you look at the market today, why is the market? There are two drivers of stock markets around the world. One is the prospect for earnings growth of the companies listed there, and the second is I think that this is a bit technical, but it's underappreciated, is the level of interest rates. So if your interest rates are very low, that automatically boosts valuations of companies, because you're able to then sort of price growth out much in the future. So because interest rates are so low and there's so much money sloshing around the global economy, that a lot of it is finding itself into the stock market, particularly in what people see are the winners of the post-pandemic world, the companies in the virtual world. So I think that in that regard, this is a perfectly logical reaction to very low interest rates. And when you have very low interest rates, rather than putting money in the bank where you're earning zero, a lot of it is finding its way into the stock market. Having said that, if you look at so that's the level, that why stock market levels today around the world, including in India, appear relatively high compared to where the economic situation is. That's the level. But if you look at the stock market movements, those, I think, on a daily basis are still sort of making sense, because the stock market crashed in March and because it was hit by this 1 in a 100-year pandemic.
Yes.
But after that, the Federal Reserve and the other authorities around the world put in this massive, massive stimulus. And once they put in that massive stimulus, I think there was a feeling that at least the economies will be able to hold up. And since then, the economic data in general has surprised on the upside. albeit from a very low level, the economic data has surprised on the upside. So I think that that's as far as the stock market is concerned, that, yeah, some of the levels are a bit confusing today because interest rates are so low. So asset prices have been inflated, something which has been happening for many years. But otherwise, if you track the stock market movements, they sort of are tracking what's happening to the economy. Then you got a crash in March, and then you got a recovery. And the view the stock market is taking, and maybe this will be right or wrong, we'll know, is that this is like a natural disaster. There's no permanent damage going to be caused by this. This is a natural disaster that comes and goes, and that once the vaccine comes, whenever it is, life can get back to some sort of normalcy, and the world has dealt with it. Now, in the last 100 years, we have had 3 major pandemics, including the Spanish flu of 1918-1919. And of course, before this crisis, nobody even remembered those pandemics. Even today, I think very few people know that in 1957-58, that pandemic in Asia, hardly any, like one remembers that many more people died in that, especially the share of the population, than what's happened so far. Similarly in 68, even in 1918-1919. So I think that that's the view the market's taking, that, yeah, it's grave for now, but that a year or two from now, this is not permanent damage, but this is a natural disaster that comes and blows away.
And all these 100+ PE multiples that you're seeing in especially in America, companies that are still losing money, is this a sustainable trend, do you think?
No, I think that there are pockets of bubble in America, and the American stock market, because it has so many of these tech companies and these exciting growth companies, that's where a lot of the money has been channeled. Something similar we saw in 1999. In fact, the American stock market today, by many valuation measures, is the most expensive it's been since 99-2000. So that's not sustainable. But the rationale for that is that the price of money is very cheap.
Yeah.
And so that money just keeps flowing into those kind of things. So if in the next year or two, for some reason, interest rates have to rise, even a bit, and can be long-term interest rates, I think then you have a giant bursting of that bubble. So it's very predicated on interest rates being so low. But if interest rates were to rise even a bit, then all these companies trading at these crazy valuations, I think, will get hammered. But the very low interest rates and low liquidity today is what's happened so far.
Ruchir, on on COVID, this is one question which kind of I've always thought about when we are covering COVID, very in good detail in the newspaper, is what is your assessment of the Modi government's management of the COVID economy, what it should have done, which it hasn't done, and what it needs to do going forward?
So one of the sort of, rules in my book is about state competence. And I think that if you look at this state competence, if you look at the objective data of how the pandemic has been handled, the objective way of handling it is that so far, how many cases and how many deaths have you had per million? Because, the absolute numbers in India will always look very large given the fact that we are about the most populous country in the world. Yeah. So I think you do that. On that regard, if you rank, where India is among all developing countries, I did this exercise. If you look at the 25 largest developing economies, where does India rank today in terms of its caseload and its deaths per million? We are bang in the middle, in terms of where we rank today. So you can say that's an average score. What I said at the outset, in fact, the moment the lockdown was announced, and I wrote about this a lot, was the fact that a developing economy like India cannot afford to have a draconian lockdown. It is just not something which we can afford to do. And this is where I keep going back about our ego writing checks which our body can't cash, that maybe Europe can afford to do that, but a developing economy with very high population density, that is just not a sustainable strategy. So I think that, but at that point in time, I think that, the government too possibly underestimated that, they thought in 3 weeks they'd be able to clear this out, and how persistent this would be. But I don't think a developing economy, a lockdown is a sustainable strategy, even in the West. So I think that this lockdown in general, I think today is finding fewer and fewer supporters, because I think people are realizing that this is not a sustainable strategy. And I know that there's been such a heated, polarized debate about Sweden. And I don't know as yet, like what the verdict on Sweden is, because Sweden, the data first looked bad, now it looks better. But all I'll say this is that without choice, India has been compelled to follow the Swedish model. Because, unfortunately, look at how things are today, right? We're just being forced to live with it. Because I think that, and, the economic consequences are so dire of the lockdown that, we've just figured out that, listen, we just have to live with what we have today. And of course, now this is hindsight, but at least I can say that I wrote about this right at the outset back in late March, that lockdown was never going to be a sustainable strategy, especially for a developing economy like India.
Yep. One thing, Ruchir, was, in the last 1 week or, 10 days, we have seen the Modi government actually expending a lot of its political capital on agri reforms. How they kind of pushed through the bills in parliament. Do you think that as being so critical at this point of time for the government to actually go ahead and kind of put so much of force into that?
Again, as is the case in India, the debate is so polarizing, because I think that it's about the fact that in principle, what the government's trying to do in terms of free up the agricultural sector, you can argue is a positive step. But the method in which it's done is what I think has really rankled a lot of people. So I think that it's back to that, right? Which is the fact that, can you take people along, or you think, the fact that once you decide on something, you don't feel compelled to take anybody along because you have the brute majority to pass those things. So I think that it's, it's not just complicated stories where there's no right or wrong. Yeah, in general, this is the time to carry out economic reforms. What the nature of those reforms, should be, we can argue whether it should be much more privatization, or, it should be much more about easing the regulatory and the tax hassles that the average domestic business faces in India. I think that, because we have a tendency of treating most businesses in this country as crooks, especially at a political level. And you can argue there's some truth to that even, but you could argue, why is that happening? Is that happening because of the laws, that to follow any law, you have to break 10 virtually to try and follow the law even? So I think that it's that kind of thing as far as this country is concerned. But yeah, so in general, I'm glad that, the word reform is back in the government's lexicon, but whether it should have been done this way and the method is, I think, something which a lot of people are debating, at least quietly.
Ruchir, one question, and then probably if Anand says, then we'll throw it open to the audience. Many of my colleagues in our office, all of us have kids who are in an age where in the next 5 years, they'll be out there in the job market. So, given the time frame that you kind of say that, analysts should focus on, 5 years or at best 10 years, how do you place your bets on India? Is it a very promising country for the generation that gets into the workforce?
So there are other economies on which I have always expressed very strong views, right? But as far as India is concerned, the line that I've always used for India, and I don't feel compelled to change that line about India, is that this is the country that consistently disappoints the optimists and the pessimists. I go on saying that to everybody, and I think that's how it's going to be. So which is that, my disappointment with India as somebody, who loves this country so much that even if my base is New York, at the slightest excuse I come to India, is that I wish we were much more of an economic success story. I wish our politicians, thought much more about giving people economic freedom. But unfortunately, and I don't think it's just about this government, the state level, I think what this episode has shown me, including the pandemic, is the incredible ability to hoard power. We don't want to give up power. That is such an obsession. And you have so many supremos at the state level as well. So to me, that is the disappointment that I wish, and maybe that's coming bottom up. Maybe, as a society, we are socialist and statist and very, deferential of authority. But I just wish that there was more of a sort of, free market liberal agenda in this country than what we have. The short answer is that I don't think India is going to grow at a pace of more than 5% on a sustained basis for the foreseeable future, because growth everywhere is coming down across the world. And for a developing economy with a per capita income of less than $5,000, if you're able to grow at even 5%, I think that's going to be, that's going to take a lot in an era where you have deglobalization, where you already have high debt levels. I think that's going to be quite a challenge. And even India's demographics have changed, as I keep pointing out, that in the book, as I've shown, that the days when India's demographics could power growth, that also has turned now. India's working age population growth now has fallen below 2%. And so that's a very different sort of propeller of growth compared to what it used to be historically.
I was going to just ask, I think, this last question before we take it to the audience, which you touched on, Ruchir, was what I was quite fascinated about was that was essentially what I got from that the population chapter in your book was that you don't think Indians are reproducing enough. I mean, that's primarily what the lesson is, and that's one thing that we've never heard before. We always thought that India is a country where there's just so many, the workforce is just available. There's so many people. So you are concerned that. So firstly, you mentioned in the book that the workforce, the population that can work, is a big factor to how successful and economic growth a nation has. And you're saying India's growth of that of the workforce has dropped to 2%, and that actually will at some point become a liability. Our population will become a liability rather than spur economic growth.
From pure economic growth perspective, so what I argue in the book is this, that having strong population growth of the working age population in particular is a necessary but not a sufficient condition for economic growth. So if you look at countries that have historically had high working age population growth that are defined as 2% or above, typically those countries are the ones which have been able to achieve high economic growth as well, because it's such an important driver of economic growth, the number of people coming to work, and then it is about how productive they are. So it's a necessary but not a sufficient condition. There are many economies in the world, in the Middle East and in Africa, which had very high population growth and could do nothing with the demographic dividend. So it's not that if you have good population growth, you'll get high economic growth. But without high population growth, there are just no cases of very high economic growth countries, because that is the base on which you build.
No, I'm saying, when does that become a liability? Because at some point you end up with people who are older than the working age, but they're not replacing in the same proportion for the working age. So at what point?
In some states, it's already happening in some of the southern states, but I don't think it's a liabilities yet. What I'm going to say is that if you look at historically countries that have grown at a rate of more than 5 or 6%, typically they've had working age population growth rate of at least 2%. India is now beginning to fall below that. So now you have to counter it. One of the biggest untapped resources in India is our female labor force participation. That India has one of the lowest female labor force participation rates in the world. So you need a lot more female participation in the labor force. And I think that the more of that you get, the more successful in general you're likely to be as a society and as a country.
And you also spoke about automation and robots playing a role in productivity. And again, in India, we felt that was a little bit of a threat, because where are the jobs anyway for the workforce, and automation is coming so fast, in almost every business. Is that a concern?
But that's the point I made, which is much more relevant to the aging Western and societies. Like one of the fascinating findings I have in the book, in fact, is that if you look at it today, there are, I think, nearly 50 countries in the world, 50, where the working age population is shrinking. These include from Japan, China, right up to Germany, Italy. The working age population is shrinking. 50 countries. To put this in historical context, in the 1980s, there were just 1 or 2 countries in the world where the working age population was shrinking. And those were Afghanistan, Somalia, basically who cares, right? I mean, like that is what was happening. Now you have 50 countries where this is happening. So I think that is what we have to keep in mind, and for those economies, the robots and the automation, I think, is coming just in time to help with the shrinking of the labor force. So if you look at the highest robot density today, which are the economies where the robot are being used a lot, those are these aging societies, including Germany, China. These are the places where the robots are being used.
And yet increasingly globally, immigration is still getting tougher and tougher. I mean, it's politically tougher to kind of push and digest.
Exactly. So therefore, robots and automation become even more interesting, for countries, because like countries like Germany, they could do with a lot of immigration because their working age population is shrinking every year by hundreds and thousands of people.
Yes.
But the moment you do immigration, it becomes such a politically sensitive topic because of what it does to the social fabric of a society.
Yes.
So therefore, the point I make is that increasing female labor force participation or even robots are coming just in time to help these aging societies. So the robots are more of a complement to growth rather than something which is supplanting the existing labor force.
Sure. I think we break to the audience, Vaidi. If I can just ask Mr. Jaspal Bindra to unmute himself and make a comment, ask a question.
Hello, can I be heard?
Yes.
Yeah. Ruchir, we've been reading a lot about the fact that the US and Japan are actively incentivizing their domiciled companies to reduce or diversify their investments from mainland China. Is that going to really reshape the manufacturing scene in the world? And how does it impact India?
Right. So far, if you look at the evidence, there is some diversification going on outside of China, but it's happening a lot slower than you think. And that's because China is still a very large market and because China has been moving up the value chain. So what's moving out of China is much more of the low value added stuff. And the big beneficiaries of that have so far been countries such as Vietnam, or, has been the biggest beneficiary of it. Now, one good thing is that as far as India is concerned, so far, India's share in global exports and India's share in foreign direct investment around the world has in fact gone up over the last 3 to 4 years. It's possibly one of the underappreciated stories. So it's not something which has happened in a big way, but at least it's gone up. So the point I'll make is this, that yes, companies, US and Japanese, are trying to diversify their supply chains out of China. It is a lot slower than what we expected. And the competition for that is quite intense because you have so many economies trying to play the same game, whether it's Vietnam, Indonesia, Malaysia, or Mexico, right across the border from the United States. So this is a very difficult game to play. But yeah, I think that it is happening at the margin, particularly for low value added stuff. And India does have an opportunity. And because maybe of India's large domestic market size, we are seeing some movement towards India, but possibly not as rapid as we'd like, and certainly nowhere near as rapid as the likes of Vietnam.
Thank you. Can I ask Mr. Harsh Goenka to unmute himself and make a comment, ask a question?
Yeah, Harsh here.
Hi, Harsh.
I wanted to know what are the top global trends that you are seeing in the post-pandemic world?
So I think that basically 4 big trends is what I will say. We are seeing deglobalization, we are seeing digitization, we are seeing debt levels rise, plus we are seeing the state become more intrusive and larger. I think that those are the 4 big trends that we are seeing in the post-pandemic world. So what's very interesting about this crisis, Harsh, is this, that if you look at past crises, what happened was that once a crisis happened, the world got almost turned upside down, right, in terms of how things were. The distinctive feature of this crisis is that these trends I spoke about were already happening before the crisis began. And after the crisis, these trends have been accelerated. In fact, they've been telescoped in time. So many of these trends of digitization or deglobalization that we thought would play out over the next 5 or 10 years have played out virtually in 5 months. So that for me has been the distinctive feature of this crisis. And these are the big trends that I'd say are playing out currently.
If I can ask Mr. Shyam Bagri. Mr. Bagri. Okay, I think we can.
Hi, sir. Can you unmute yourself?
Now,
Yes,
hello.
we can hear you. Yes, please go ahead.
Yeah. So my question is that we talk about economic growth. I want to call it responsible economic growth. Our aim is that with economic growth, we should be able to increase the purchasing power of the poor people. But at the same time, we should be able to uh, we can improve the environment without impacting the environment. So how can we do that? I mean, what can be the measures for that? What can be indicators? Is there any metrics we can make that the economy is growing, but at the same time, it is not affecting the environment, and whatever we are facing is all because of a lot of problems we are facing because of environmental problems we are facing all over the world now.
Yeah, so broadly, I think that this debate is there, and it's almost as if we think there's a big conflict between high economic growth and some of the other measures in society, whether it's climate, whether it's got to do with happiness, whether it's got to do with inequality. I think that's what you're referring to. And here's what my research shows, which is that per capita income is the single best indicator of how a country is doing on all those metrics. And what does that mean? That the richer a nation with higher per capita income, the greater the correlation with happiness, with climate sustainability, and also with inequality in general and things like corruption. So, like, take the case today. Which is the richest country in the world? It's like Switzerland. And that country has the highest per capita income of over $80,000 per head. And on most measures, like inequality, on happiness, it ranks right high there. Same with many Scandinavian nations. So I would say that focusing on increasing your per capita income is the single best way of achieving your other goals in life. And so in that way, because per capita income growth is so correlated to your economic growth, the conflict is less than it seems.
Can I ask Senthil to ask his question? Senthil Chengalvarayan.
Please unmute yourself.
Hi, Senthil, can you unmute yourself?
Yeah,
Sure.
Sure, okay. Ruchir, given that you're a big believer in data and you appreciate data so much, and what are the next few data points that you'll be looking for over the next, say, 6 months, 1 year, and 2 years for India in specific?
As far as India is concerned, one thing which I think that we'll all be looking for is, believers in data. So my 10 rules Senthil is basically that, right? That it's all data driven. So in terms of how does India rank on those rules and to be dynamic as far as that is concerned. So what I constantly do is to use those 10 rules to consistently keep keep updating where does India rank on those rules. And so that's what I've been doing for the last, and so what are those rules? As I said, the most important ones are, is India gaining more share in the global export world? What is India's share of foreign direct investment? What is happening to concentration of wealth in India? Is it getting more or less concentrated? Those are the kind of data points that I'll be looking at, I think, for the next 6 months, 12 months, or 18 months. I think that, so that's my entire effort, Senthil, in coming up with this book. That most economic books, I find, particularly books like these, are written by academics. And the big problem I have with books written by academics is that they tend to have very long-term horizons for which neither you nor I'll be here to know whether you're right or wrong. And what I've tried to do in this book, therefore, is to come up with a time frame using data. That what can you track actively to know if a nation's doing well or not doing well? So these kind of data that I mentioned is exactly what I'll be looking for to see that is India making more progress or not making more progress. And what I do is to maintain a scorecard of all countries in the world, developing frontier markets, and to keep updating these rules you can score the rules on your own on an index of 1 to 10 to see as to where these countries are ranking. So that's the data that I follow about having discipline, because so often we go to a country and come back, with just opinion. Oh, this looks good, that doesn't look good. And my point was to systematize that process and come up with a practical read that you can look at and to try and help you based on historical research to show what is the data you should be looking at to know if a nation's rising or falling. And in India's case, I think that this kind of data is what I'll be looking at. How much I'll be spending on research and development rather than on welfare. It's this kind of data that I'll be very focused on in the next few quarters.
Go ahead, Vaidhi.
Yeah, is Mudit Jain, if he's around? Yeah, go ahead.
Yes, Mr. Sharma. My question is, this is opposite of Keynesian economics, and I'm talking with reference to India. Is it better to spur consumption and the economy by abolishing taxes completely so people will spend more and consumption will stimulate the economy? Thank you.
Well, that's a very radical suggestion. I don't think that any economy today is doing that. In fact, there are economies even in the Middle East which used to not have taxes that are introducing some form of taxation. So I think that abolishing, no, but yeah, rationalizing the tax structure is something I'm all for. And I do feel that having more surcharges is also spoils the federal polity of our country, because the revenue flows to the center, not to the states. So what I'm much more in favor for is the simplification of the tax structure, something that we were doing in the 1990s and something that we have gone into reverse gear over the last few years. But I think that just spurring consumption by abolishing taxes is not going to get us anywhere. Again, I go back to East Asia and its successful model. They, in fact, did not focus much on consumption in their first few years of development, or at least at a similar stage of their per capita income. They focused much more on the production side, on building manufacturing, on giving concessions to businesses to set up factories and to build special economic zones. I think that's where we need much more focus rather than just spurring consumption. We need much more of a supply side spurring, I think, especially on the manufacturing side, and incentivizing domestic businesses to produce more at home rather than move overseas.
Can we ask Mr. NP Singh, please? Please unmute yourself. Mr. NP Singh?
Sir, please unmute yourself.
Okay. I think we'll come back to him the moment he's ready. One question. Please go ahead. Yes.
I wanted to ask a question about agricultural reforms. Mr. Sharma, you seem to indicate that you are in favor of what is being done at the moment. But really, in the context of the fact that the GDP declined by about 25%, while the farm sector went up by 3%, doesn't it show that by and large the farming system in India works? So what is this great, insane hurry to ram through these reforms at this moment? Can you please explain?
Yeah, so I mean, stands very clear on this, which is that I said a broad reformist thrust is something that I support as far as the government's concerned. Now, the method in which they've done it, the timing is what you can question. Having said that, yes, in one quarter, the agriculture sector has done something, which is very well. But to say that agriculture in India has been a success story for a long period of time would just be wrong. The data doesn't back that up. I mean, we have had very poor agricultural growth, which has lagged even, like economies like China for many years, if not decades. So my point is not about the fact that I support what happened at this time and the method in which it was done. I'm saying the broad thrust of, introducing more of a market discipline on the agricultural side is what I've said is my broad support. Now, you can argue that the timing for this should, have been at a different, the method should have been different. Yeah, I'm sympathetic to that. But I think that to say that all because in one quarter agriculture was very resilient, to say that that's the long-term success story, like in India, and the farm sector is doing well, is just not borne by data. And remember again, that the success of East Asia was about reducing the dependence on agriculture and moving people to new cities and to manufacturing zones as the way to grow. Whereas over-dependence on agriculture didn't get economies anywhere around the world.
Ruchir, if I may just bung in one question. It's been 6 years since Narendra Modi has been in power. So would it be a fair enough time period for you to kind of make an assessment on the checks and balances of democracy in play here? Do you find any reasons to worry?
Yeah, sure. I think that what's worrying about India is the fact that, is the lack of the opposition as well, right? Because I think that, we focus a lot of the center, but this model in India where you have a lot of, I think the checks and balances in India come now increasingly from the states. That's really where the checks and balances come in. We are very focused on the center and the lack of opposition there, but the checks and balances are there at the states. So the states, the picture is much more varied. So I think, it is troubling, when we sort of see the level of fear which exists among people, among businesses, when you see the level of fear which people express in talking openly, stuff that, as a true believer in democracy, that I'm not a great fan of. But I think that one thing which I think is underappreciated as far as India is concerned is the checks and balances provided by the states. There's a lot of power at the states, and the states is where you see the checks and balances come. And that's what this government has found, that after the election victories in 2019, people had linear projections of when the government would have a big majority in the Rajya Sabha, blah, blah, blah. And then you look at how the state elections have gone after that.
Essentially, that's also political opposition when you talk about says, but what about institutions of democracy in India? Do you see a worry there?
Yeah, of course. I think that that is something that is a widely expressed worry, and I think that is a very again, this is not my expertise because in terms of I think people like you are much more equipped to pass judgment on that, but that is something I do worry about, but that is more as a citizen. But as an expertise, I mean, I've tried to argue to you that what happens when a country becomes more authoritarian, what are the economic outcomes, how growth becomes more volatile, when does a leader deliver economic reforms and economic growth, what's the sweet spot? That is really what is the research that I do. But this general comment on institutions and where, as a common citizen, I do, but I think that there are experts like you who are much better equipped to explain that.
But Ruchir, somewhere in the book, you touched on this idea that there are trends you've seen in other parts of the world as well, where everything is secondary, and for a period of time for the electorate, things about reinforcing identity, focusing on identity, and a certain type of nationalism different for different countries, just becomes more important for the voter than anything else. I mean, it's something that has happened in other parts of the world in across the last couple of decades, right?
Yeah, no, I mean, the case in point, this is the United States, that the extent of polarization in the United States is unparalleled. In fact, a friend of mine described it as Civil War light, because I've never seen such polarization in America, and the data again bears it out, that 90% of Republicans back Trump. In the past, that number was never as high as 90%. On the other hand, more than 90% of Democrats hate Trump. You never had numbers like this in American political history. And it's been systematically getting more polarized, and it's gotten even more polarized over the last 4 years. So I think so this is a bit of a worrying aspect, because even economic facts now are completely subject to political ideology. One of the most fascinating statistics, Anant, which I think I remember, is that before 2016 election, under Obama, most Democrats had a favorable view of the economy, and most Republicans had an unfavorable view of the economy. 3 months after Obama left office and Trump just came to office, nothing much had changed by then, because the economy was still doing what it was doing. Trump had hardly enacted his agenda. And the numbers exactly flipped. that now, because Trump was in office, most Democrats thought the economy was doing poorly, and most Republicans thought the economy is doing really well. Just in 3 months' time, nothing changed on the ground. So that is the level of identity politics and the polarization which has happened. And I think that in some way that's true of India too. I can try and create as objective a scoreboard as possible in terms of what the rules of the road and the 10 rules of successful nation, that, like, so to speak. And yet I know that if I sound, that the rules show India like in some negative light, I know as to who's going to appreciate it and who's going to completely diss me for it. So so that is the really worrying aspect to me, that we're in the post-truth world where it's no longer about data so much, where people like me are still trying to sort of say, hey, let's come up with rules, let's look at things objectively. And it's more about what's your ideology.
You spoke a lot about America, and there are a lot of questions that came to us. I'm seeing one from Pradyum Dalmia, and I saw a few others as well on the US elections. If you just share with us your view on how it's going. I mean, of course, we know it's a very polarized election. You said that, but I won't ask you to make a prediction. But
I don't mind. I don't mind asking that, but still, yeah. What's your call?
So listen, I spoke at your Express E-Adda in May of last year, after having toured the country.
Yes.
And I can say very humbly that after having toured, places like Uttar Pradesh, I did not, and neither did my fellow travelers, see such a wave in favor of Modi. Now, this is a country which we think we know well. We traveled our backyard, and you couldn't see like a wave like that. So as far as America is concerned, even though I may live in New York, for me to try and call an American election when things are so polarized would be even more presumptuous and even more preposterous to do so. I think I'll say this to people, which is that the single best indicator that I look at on a daily basis are the betting odds, which is that what are the betting odds telling me? Because the betting odds are trying to predict to you what's going to happen like a couple of months from now, and people are putting their money where their mouth is. So the betting market today, I think, is about 56% for Biden and 40, whatever the balance for Trump. I think that is, like, for me, the best indicator in terms of how to read what's going on. I think that anything else is inconsequential, because it's very hard for us to try and do that. It's a great parlor game, so if you can do it for fun, but even there,
But Ruchir, I mean, this old sort of adage that Democrats are bad for India and Republicans are good for India, it's completely decimated now, right? Which is proven over and over again that's completely incorrect.
Yeah, I think that's true. We began to see that. I think we saw it a lot during the Bush years as well. You remember how disliked a figure he was amongst a lot of the the elite crowd, and yet I think that he was great for India in terms of what he did. And I think that on Trump, it's a bit trickier, but you're broadly correct, which is the fact that this entire old notion of Democrats are better, and this, I think that's just not.
No, so between the two of them, who's likely to be more protectionist? Who's likely to have more of a protectionist approach to the global economy?
I think that definitely Trump, but I think that this is one of the things, that one of the enduring trends is going to be deglobalization. Even Biden has changed a lot.
Yes.
No, exactly. No matter who comes in, Biden has changed a lot. The pressure is incredible now on the face of being much more protectionist. Even Hillary Clinton, before she lost in 2016, was beginning to question the U.S. commitment towards regional trade agreements. Someone like her, who's as globalist as they come. And so Biden's changed. So I think that no matter who comes to power, we are in an era of deglobalization, and I don't see that reversing itself anytime soon. Maybe under Trump it keeps accelerating, but I think that no matter who comes, that's the era we're in.
We'll get Ashok Khemka.
Mute yourself.
Hello.
Yes, we can hear you. Please go ahead.
Yes. Just a minute. Yeah, I wanted to ask Ruchir, this vocal for local thing in India, how do you reconcile with the benefits from global trade and favorable immigration policies?
Yeah, so it's still unclear by, like what exactly they mean by that. And are we really abandoning our strategy of trying to increase our export share, or, this is just a new reality that we are adapting to in an era of deglobalization? But I see this as just reality. So it's very interesting that the other country where the word self-reliance is very popular these days is China. The same word, self-reliance, you hear on and on in China. So it's really ironical that some of the biggest beneficiaries of globalization have been countries like China and even India. That there's no way any economy in the world can grow at a rate of 7, 8, 9% without exports playing a major role in that. It's never happened in history. So I think that now you can take the point that India has no choice because we're in a deglobalized environment that we're coming up with these kind of strategies and slogans. On the other hand, it's very clear. If we are not going to export or have export growth, which is relatively strong, it's harder to do, obviously, in a deglobalized environment. The probability of achieving high economic growth is zero. Because even in the boom era of 2003 to 2008, export growth was 30% a year, or some number like that. So unless you have export growth of 20, 30% a year, the odds of you growing rapidly are close to zero.
I'll just ask one last question and we can close. Vaidi, unless you have, you want to, okay.
No, I can go on, but then let's...
We can, Ruchir, we can talk for hours and it never get late. But Ruchir, you wrote a very interesting piece in the NYT, I think last month, about how during the lockdown, people haven't been watching movies, but they've been gaming their way through the lockdown. And I found that very fascinating because I think, gaming is the ultimate global medium, right? There's no language barrier, there's nothing. It's just kind of more than literature, music, movies, more than anything, and it's such a huge, new economy. It's a whole world that operates on its own. But again, it's fighting against this major sort of grain of deglobalization, of protectionism, of in India we banned all these apps from China. That's a whole why India-China relationship is a separate question altogether. But do you see that industry really getting the attention it deserves ever in the global stage?
It's already happening. Like the revenues that you get from gaming today are already more than movies, music. So I think that this is just happening. And the smart companies and the smart content producers are already gravitating much more towards that. So now you even have film launches which happen on the gaming universe. You have people using gaming for education portals as well. So that's just the future. I think that gaming is the future. It is the future of entertainment. And the faster you adapt to that, I guess the more lucrative it's going to be for businesses, because that's where the consumer, that's where the demographics, that's where it's moving. So, it's taking market share from all other forms of entertainment. And even in things like education and betting, you're finding that that's the growth. So in terms of the attention it gets, well, there's no choice. The consumer is moving in that direction. And
which country will stand to benefit? Which country will be a net exporter of the gaming product or service?
Europe's doing very well. Like among the few countries that I mentioned, which have done really well in the post-pandemic world, I think that you're seeing countries such as like some of the Nordic countries like Finland, etc., like to do that. But again, when it comes to tech and tech software, US and China still, still stand out there. They still dominate. But this is one area where even Europe can try and catch up, because it's been a bit of a laggard on the tech front compared to US and China. But I'm seeing a lot of good content creation come through from there. But this is where, a company like Tencent, and this is what I talk about, how things have changed. The largest investor in gaming companies around the world is Tencent. So they are sort of doing what where they think the future lies. So these large companies know that, and they're moving that way. And I think it's so interesting that even in the United States, someone like Epic Games is one of the first companies that stood up to big tech and thought it had the power to take on big tech. So I think that just tells you about creative destruction still working in some regards, where something new comes up and starts displacing the existing order. And I think that gaming is that it is the future of the entertainment industry.
Super. Ruchir, thank you so much for your time and for being here. It was a sold out show and an incredible audience we had. A lot of them were, I think, shy to ask questions. But I must thank our corporate partner, IIFL Wealth and Asset Management, and our associate partner, Baggeries, for being with us. And for another fabulous Adda. And see all of you in the audience, see all of you sometime next month with another guest who's a newsmaker and who's going to keep the Adda alive on this virtual platform till we can all meet again in a physical room. Thank you so much.
Thank you. Thank you so much.